The end of America. I've been saying to people, silver is still 50% its all-time high.
Why is Robert saying all these things? Is this the end of America? We've already seen stock prices going down. The shares of many giant companies are going down. People are not satisfied with the performance of those companies, but the question here arises, why is that so? Hi guys, welcome back to Glory Investing Show, and in today's video, we will dive into things that we're seeing about the crash of America against China and Russia. The trade war between China and America. Somehow, we all know a bit about the trade war between China and the United States. A so-called Cold War, driven by divergent ideologies, has developed out of what started as a trade conflict against China's unfair economic practices, when former U.S. President Donald Trump imposed harsh tariffs on China. In 2018, as a result of his obsession with trade deficits, bilateral relations between the two countries fell to an all-time low. Following the levies, China's access to high-tech American imports was restricted, along with foreign investments that raised security concerns and claims of unfair Chinese business practices. President Joe Biden of the United States has so far intensified his predecessor's policy by fortifying anti-China coalitions and enacting further sanctions, despite requests from the American business community to diffuse tensions. The U.S.-China dispute is currently described by Biden as, quote, a confrontation between the usefulness of democracies in the 21st century and autocracies, end quote. But given the negative long-term economic effects on both sides, the reasoning behind the U.S. trade war was wrong, and the more recent politically motivated limitations are ineffective. However, there haven't been many indications that Biden will modify his mind so far. Therefore, Europeans may be in a better position for fruitful back-and-forth negotiations with China on economic policy making in the interim. What did Trump do? The initial error made by the Trump administration in starting a trade war was to believe that China was to blame for U.S. trade deficits. It usually happens when a nation imports more than it exports. Trade deficits, however, are not a reliable predictor of the health of the economy. And you might also want to note that while having nothing to do with China, the U.S. federal budget deficit is largely to blame for the country's ballooning trade deficits. Ironically, 3 years after Trump imposed tariffs to address the U.S. trade deficit, bilateral trade between the two countries has recovered to record highs. China's trade surplus has grown, and the U.S. deficit has worsened. Trump also echoed popular but misguided sentiments that U.S. firms have been over-investing in China, resulting in a loss in competitiveness. But over the last 2 decades, only 1 to 2% of annual U.S. foreign investment has gone to China. By contrast, the EU, which is comparable to the United States in its economic size, has invested roughly twice as much as the U.S. has annually. This concern should be why the United States invests so little in China rather than so much. The current situation. In this trade spat that the U.S. started, nobody wins. Real exports and GDP drop in nations with increased tariffs, including the United States. Through supply networks or as a result of slower global economic growth, other countries suffer indirectly from weaker demand for their exports. Any benefits from diverting commerce to avoid tariffs will be outweighed by the negative effects. The level of the world's real GDP decreased by 0.1% in 2021, 0.8% in 2019, and 1.4% in 2020 under the protectionism scenario. As a result, the rate of global economic growth in 2019 and 2020 just exceeded our 2.0% cutoff point for a worldwide recession. Let me tell you that world trade suffers in a more protectionist environment as countries turn inward and multinational companies move production to end markets to stay competitive. In this scenario, real global exports of goods and services are 2.4% below the baseline level in 2020. The sharpest declines in real exports occur in China and the 3 North American countries. U.S. imports. It should come as no surprise that the U.S. has the biggest drop in real imports of goods and services. Real U.S. imports decreased by 4.5% in 2020 as compared to the base level. China faces a considerable decline in real imports as a result of the high import composition of its exports, which is responsible for a 3.2% decrease from the baseline in 2020. Real fixed investment is constrained in the situation of a trade war, reflecting loss in real exports, financial hardship, falling equity prices, and decreased foreign investment in developing countries that are the target of U.S. import restrictions. Here, it's important to note that the biggest losses will occur in China, as both domestic and foreign investors would be more hesitant about investing in the capital there. For many decades, China and the United States have been locked in such a tight economic embrace that it is challenging to quantify whether, how, or why the embrace may be weakening. Are the mounting tensions, bordering on hostility between the two superpowers, causing their economies to decouple? On the other hand, the U.S. has seen a sharp decline in its imports from some Chinese goods, such as semiconductors, some IT systems, and consumer electronics. Even imports of furniture, clothing, and shoes have decreased. On the other hand, more toys, phones, video game consoles, computers, and computer monitors are being imported from China than ever before. In response to the COVID-19 outbreak, demand for these goods increased dramatically. Americans who were confined at home shifted their spending away from services and toward many of these Chinese-made goods. The economic interdependence. The economic interdependence between the U.S. and China, which was developed for many years but is now crumbling under the weight of their animosities, certainly appears to be a goal of U.S. and Chinese politicians. So far, former President Donald Trump's trade war, the selective nature of it, and the continuation of many of those policies during the Biden administration are contributing factors to the decoupling that is, and is not, occurring. The desire for greater import diversification to strengthen supply chains for certain items may be a more recent driving force behind decoupling. Human rights, democracy, and geopolitical considerations are other catalysts. The findings also indicate another thing, though. Even if officials believe that separating the two economies will have long-term advantages, their decisions have immediate consequences. The costs include both inflations, as businesses find it expensive to establish new suppliers, and product shortages, as supply systems struggle to adapt. Companies must get ready to pay the price for the new reality created by policy, as will consumers in the end. So Robert was very worried about the conditions of the U.S. economy, because a trade war initiated by the United States would do serious damage to the global economy as protectionist actions escalate. Countries imposing tariffs and countries subject to tariffs would experience losses in economic welfare, while countries on the sidelines would experience collateral damage. If tariffs remain in place, losses in economic output would be permanent, as distorted price signals would prevent the specialization that maximizes global productivity. China and Russia are ganging up. Although still remote, the likelihood of a full-scale trade war is rising. Since China and the United States stand to gain the most from a deal, it is in their best interests to handle important problems like market access, intellectual property rights, and technology transfer through joint ventures. On the other hand, China is ganging up with Russia against the U.S. Russia and China are still intertwined, despite their numerous conflicts of interest in Ukraine and elsewhere. We frequently concentrate on geopolitical aspects, including potential threats from the U.S. and its allies, the necessity for security along their extensive border, and their expanding energy alliance. However, the normative aspect has also been important under Xi and Putin, as both consider regime security as their top priority. They are keen to change the international order so that authoritarian regimes can be the ones setting the rules. Putin and Xi issued a statement declaring there were, quote, no restrictions on Sino-Russian collaboration, end quote, and, quote, no forbidden zones, end quote, just 20 days before Russia invaded Ukraine in February. This does not imply that the relationship is without limitations. That's all for today's video. I hope you enjoyed it. If you found this video helpful, make sure you smash the like button and share it with your friends. Don't forget to share your thoughts with us in the comments section below. And while you're here, make sure to check this video to find out how to thrive and be successful in the upcoming recession.